Thanks for your company. Well, countries are closing their borders and stocks continue to fall, with Trump's words seeing some airlines bounce. The US benchmark indices suffered their sharpest falls since 1987, with the Dow down about 13% or 3,000 points. It comes as we saw the US President Donald Trump tell Americans to avoid gatherings of 10 or more people, also warning the US could head for a recession. All this comes despite the Federal Reserve just a day ago trying to curb the coronavirus impact, taking their interest rates to zero and kicking off that US $700 billion QE program to inject new money into their economy. Meanwhile, Trump announced that the government would backstop the airlines, which gave some airline stocks a boost. Delta Air closed about 6.6% lower, while American Airlines rose 11%. So now the question is, when will the Australian government do the same and put a support in for our airliners? In Europe, stocks closed about 5% lower after the EU proposed to ban foreign visitors going into Europe for 30 days, with British airline parent AIG shares falling 27% and Air France down 10%. Turning to the Australian share market, well, the futures were earlier suggesting a 4% fall. How we end by remains to be seen, but yesterday the ASX 200 shed 9.7%, which wiped off the 4.4% Friday gain. And yesterday's fall was also our biggest loss since 1987. So we know uncertain times are around as coronavirus continues, and volatility is likely to remain for some time, particularly as the Prime Minister said overnight, Scott Morrison, that the outbreak should be at the tail end by September. So when will we see the recovery? Well, we don't know. There's definitely light at the end of the tunnel, especially for those companies with low debt and high repeatable earnings, particularly for those companies that are starting to see their earnings bounce back as Chinese production and Chinese consumers return to work there. But for one fund manager, Kathy Wood from ARC, she says markets could make a V-shaped recovery. In terms of company news and what to watch today, we saw Coca-Cola CCL withdraw their earnings guidance for the year amid the disruptions from the novel coronavirus. Estia Health HE says they're planning for an escalation and they are prepared, which is why they withdrew their earnings guidance. But in good news for their elderly who are in their homes, they have not reported an outbreak or any coronavirus cases. Meanwhile, in good news, New Zealand King Salmon NZK advised sales in China are up and running, which is why it affirmed its FY20 earnings guidance. And I think this will be the shining light, looking at those companies that are coming out on the other side of coronavirus, particularly with Chinese consumers now heading back to work, with Toyota and Nike there back in production. And in terms of downgrades rather, Cochlear COH was downgraded to a hold by Citi as they abandoned their earnings forecast for the year. BHP, meantime, was upgraded to a buy by Citi, giving it a 12-month price target of $35, noting it has low-cost assets, strong balance sheets, and it will bode well when commodities do bounce back. Citi also says now could be an attractive entry point for long-term value. And the oil price, which is a proxy for global growth, has fallen 10% to $29.02 amid diminishing demand, with countries like Canada closing their borders to non-citizens. And meantime, gold has gained about 2%. It's now $1,509 an ounce, and the Aussie dollar is buying 61.7 US cents. Stay safe, happy trading.